Hello and a very warm welcome to VCCTV. I'm Shrija Agrawal and you're watching the second episode of DealStreet, a show where we go beyond news and bring to you perspectives from experts across the globe. Today's topic for discussion is India's tech attracts the world's best technology investors, what to expect next. Foreign VC interest in the country's technology sector has seen an unprecedented rise. There's stories of increasingly how startups after startups or deals after deals are increasingly joining the billion-dollar club in valuation. Almost every technology startup in this country is raising money not necessarily because they need it, but because it is available. It will almost look like a bubble in the making with startup valuations getting heated. So it looks like a benign VC party where one VC is selling his interest to another VC at a higher valuation. However, on the closer look of it, one would also find that the country's technology sector has attracted the world's best and the savviest investors like SoftBank and DST, to name a few. And it's almost like a self-fulfilling prophecy when you have such high pedigree of investors. In fact, Masayoshi Son, SoftBank's chairman and CEO, was in India almost like 2 weeks back when they announced the investment of $6.7 million into Snapdeal, who has been called the Warren Buffett of Asia, who's invested in companies like Alibaba, the world's largest e-commerce firm, Yahoo's Japan Corp, the nation's largest portal, and also gaming companies like Zynga. Besides SoftBank, we also have DST, run by Russian tycoon Yuri Milner, who has invested in almost every social powerhouse, including Facebook, Twitter, and Spotify. In today's discussion, we will talk about what brings so much of foreign VC interest into this country, and if you have such high pedigree of investors, does it necessarily attach some bit of merit to what can otherwise look like a bubble in the making? And discuss this with me, I have with me an interesting set of panelists. I have with me Mohan Kumar, Executive Director with Norwest Venture Partners. I also have with me a prolific angel investor, Rehan Yar Khan, who just raised its debut fund, $50 million, Orios Venture Partners. I also have with me Klaas from Intel Advisors, who brings with himself over 20 years of mid-market investment banking experience. I also have with me Samir Kumar, Managing Director, Inventus India Advisors. I also have with me Pradeep Tagare, Director at Intel Capital India. My first question, maybe I can begin with Mohan. Mohan, when you have investors like SoftBank, DST, sort of, investing into India's e-commerce space, which is almost like what I mentioned in my intro, like a self-fulfilling prophecy, does it necessarily seem like a bubble, or it attaches some bit of merit, to the entire phenomenon? What is your view?
I think that I'll answer the question in two parts. One is the appetite for risk-taking depends upon the fund, okay? And the sector itself, e-commerce itself, is a growing sector in India. It's nascent, okay? It's probably 3 years old. It is a growing sector, so if you take a 10-15 year view, there will be a lot of growth, and I think it will be about 10 to 15%, at least 10% of the Indian retail will move to online, okay? And if you take the 10-year view, then it depends upon the fund, okay? If you have a long-term view, if you have cash surplus, you could jump in, okay? For others who are not cash surplus and don't take a long-term view, it probably will look like a bubble, okay? Because in my view, e-commerce, you got to keep funding them, okay, for the next 3 to 4 years. So you should have the wherewithal to keep funding them till they reach profitability or till they reach a certain percentage of the retail market, okay?
Senses, what about valuations? Are they justified, is the question.
Valuation is for one, I think it's depending on the investor, right? For me, it may appear a high valuation, but somebody else will be low, okay? And that's a function of what success you had before, okay? If you had great success in e-commerce industry, which is what SoftBank, okay, they came out of a pretty successful IPO of Alibaba. They cashed it with 50, 60 million, okay? Same thing with DST. They cash surplus, so they are willing to take a long-term view. It took them 15 years in Alibaba, okay? So they cash surplus, and for them to getting into the next hot market, which is India or China, is a different view, right? If you ask someone else, it may look like a bubble, okay? So I think it depends on where you put.
Shiva, if I can just add to that.
Yeah,
I think
sure.
in India, people have never seen these kind of valuations. So, people are immediately thinking, oh, this is a bubble. But, people who have seen these valuations in other markets and even higher valuations in those markets, I think, things may look quite sane to them.
Klaas, what is your view? I mean, both Rehan and Mohan are saying that depends. It looks like which investor is investing. I mean, for one, it might look like sane. For other, it might look irrational. What is your view there?
No, I think, look, let's first take a step back and globally, if you look at an Uber or an Airbnb, which are still private companies, and that's kind of what valuations these companies are attracting capital, or at what kind of valuations the likes of a Facebook when it was still private in the run-up to an IPO, and Alibaba attracted capital at various stages in their life. And then the valuations in India still have a long way to go. So I would agree that if you take a long-term view, and if you are of the view that the macros of the country are such, and that on account of a pretty weak offline structure, on account of the fact that e-commerce has a much bigger benefit when it comes to selection, it has a cost benefit of no high street street rentals, all these things. So there's a lot of fundamentals here which point into a similar direction as what you've seen in China, where e-commerce and internet has taken the country by storm and has actually overtaken the penetration what you see in the US. So with those building blocks in place, people are taking a macro bet that adoption is going to be good. The leading players which are getting funding right now have seen stellar growth over the last 2-3 years, and what looks like a high valuation right now, if such companies continue to grow at rates as high sometimes as 3 to 10x per annum, then very quickly that valuation starts to become very rational again. So I would say that people definitely take a punt on the macro, take a punt on the long-term prospects of the country and the fundamentals that are good for e-commerce, and that's driving the price point at which people are willing to do deals. And I think my last remark is, look, this is all for headline-grabbing companies, market leaders, and the world over you always see that market leaders in e-commerce tend to attract a large premium.
Pradeep, Samir, what is your view on this?
I think what's going on in the internet space in India right now is it's basically a land grab, and investors are rushing in to basically make sure that they are in the right categories and in the right companies. And in most land grabs, historically, most land grabs always result in bubbles. Now, the severity of it and the nature of it is different, obviously. But nonetheless, what happens and what is happening in India today as well in this space is you get some of these marquee investors, and in fact, because of that, you get a whole lot of other investors as well that I would call momentum investors that try to that want to make sure that they are not missing out on something that the other guys apparently see. And that is what leads to these bubbles where people are rushing in just on the fear that they're missing out on something that they don't know about. And that, it leads to a classic bubble sort of situation.
Why do you sort of call them momentum investors, and why will this flow of capital stop? Like in the sense that these are like high pedigree investors like SoftBank, DST, and sort of lend a lot of credibility to the entire ecosystem. Where is this, viewpoint coming from?
Well, where it is coming from is the some of the categories of investors that we are starting to see come into the market now. So clearly, the companies that are experienced in this space like the names that you mentioned, are driving the front end of the market. My point is that what's happening behind that is the amount, the type of investors that we see.
True.
We are seeing pension funds, we are seeing hedge funds, we are seeing family offices. All kinds that basically have no, or I shouldn't say no, very little clue about what's actually going on here. What they are banking on the fact that because the category leading investors are coming into this space, that they don't want to miss out on what's going on. And so that's the second tier that I'm really worried about, where that flow of capital can stop in a heartbeat.
So I think the internet is for real. If you look at the critical mass here, 200 plus million internet users, 40-50 million active internet users, and so on. So the internet is for real transactions happening. Companies with $1 billion of GMV already created in the last 7-8 years. So I don't think we can discount the internet phenomenon and the fact that it's happening. I don't think we necessarily need foreign investors to lend credibility to data, because the data is there and everybody could see. But yes, I think it's a very good recognition of the fact that the Indian market has finally matured and $1 billion GMV companies can be created, which is what we are seeing now. And that's why the investor interest. This capital has come in. It's fueled or allowed certain companies to take bolder steps and go forward faster or do whatever they need to do with this capital. If it stops, I mean, what changes? Companies were being built in India before this capital came in. Companies will continue to be built. There are inefficiencies, numerous inefficiencies in the Indian marketplace. There are numerous entrepreneurs trying to solve these inefficiencies. There is patient capital available, not of the $1 billion size, but certainly of the 3, 5, 10, 20, 30, 40, $50 million size. And companies will continue to get built. So I don't see anything. I mean, I'm not sure whether this is stable or unstable capital. The question you asked, time will tell. But let's assume it is not stable. Let's assume it dries up after 1 year. I don't see any big downside. Sure, we won't see $7 billion valuation, but I think we'll still see the $500 million, $2 billion valuation.
But you know what has really changed, like fundamentally? I mean, all macro growth projection is all fine. But talking about numbers like $7 billion valuation, things like that. And like Rehan made a point that, these kind of valuations have been there in the other markets. But so are we saying that India has arrived on the global technology scene to see such valuations, and it should not be looked like a novelty or a rarity in the Indian market? I mean, have we really arrived there yet to see such valuations? Because on the one hand, we see that India is behind US in terms of internet penetration, behind China in terms of advancements. But on the other hand, when it comes to valuations, we are at par with those companies. So what justifies this?
Shriga, if I can just add to that, is that Flipkart reportedly was at $1 billion turnover last fiscal, right? And if you compare that to the $7 billion valuation, it might look steep, but this fiscal they're going to close at about $4 billion, right? This is what all the information that's coming in now. Suddenly, if I look at it on a slightly forward basis, the valuation is not looking steep at all. See, what the media is not picking up in sufficient quantity is the incredible volumes. There's a company of that size which is growing at 400% CAGR now 3 years in a row.
So are you saying it's not a bubble? So you're saying this entire talks of being a bubble heated valuations?
This guy grew from $1 billion to $4 billion in a year, and he's been valued at $7 billion. Does it look like a bubble to you?
No, I mean the growth is unprecedented for sure. But in terms of, but the question is the sudden surge of foreign VC interest coming to India. It almost looks like they are sort of leapfrogging the valuation. Is this kind of sudden surge of foreign VC?
These are some very high quality teams, right? I mean, SoftBank is represented by Niklesh Arora in India, who has an impeccable pedigree at Google. They have a lot of experience from other markets, so they're seeing a lot of data which they're looking at.
So let me ask a different question. Is this kind of foreign VC interest really supported by the local capital? What is there a question in the minds of the local homegrown VCs that
what local capital? There's hardly any local capital.
What if this money goes? What if this money goes?
All the money in India is foreign money. The local investor has been sitting on the sideline thinking all this is too steep and missing the party.
I think what I would add is if you think about it in 2020 or 2022, right, the retail is going to be about 500 billion in India. Even if you assume 5%, not even 10, right, that's you're talking about 25 billion in revenue. Okay, 25 to 10% is 50 billion. If you believe the top two leaders are going to command at least half each, if you're talking about 15 billion to 25 billion of revenue, right? And at that time, this valuation will look, current valuation will look
modest,
average, okay? So it depends on, see, that's why I'm saying, like, if you have the enough capital there, you have the wherewithal to withstand for 7 to 10 years, and you believe this is the best team, yeah, it is. It doesn't look expensive, okay?
So are you saying that what is looking expensive now will look cheap in the hindsight 5 years down the line?
Yeah, provided these guys execute as per plan, okay, continue to execute, okay. If they don't, yes, the money will go down the drain, okay. But somebody else will crop up, okay. And what I'm saying is there'll be one or two guys who will be 10 to 25 billion in revenue in 10 years in e-commerce, okay. And that guy will command a north of 20-30 billion valuation at the time, okay. Now, whether it's Flipkart or Snapdeal, it's up to the venture fund or the PE fund to evaluate and take a calculated risk. Okay. If it's not these two, there'll be somebody else.
But when did the investors really think that e-commerce has reached an inflection point? Now, what was that eureka moment when sort of everybody thought that now this is the time to join the great Indian e-commerce party?
When a company of size of Flipkart went from 1 billion to 4 billion in 1 year.
Okay, so Rehan, it looks like that if you were to put your bucks on, it will be like Flipkart and not necessarily Snapdeal.
No, so I mean, it shows what the sector is doing. I mean, all boats are rising, right? It shows that even someone of that size is growing at this. Earlier one could have argued that small guys are growing at a high CAGR, but now we're seeing large guys growing at a good CAGR. So all boats are rising. So Flipkart is rising, the Jabong is rising, Snapdeal is rising. All boats are rising because it's a macro effect which is taking place, and the leaders are benefiting from this effect the most.
So how this entire e-commerce phenomena going to pan out? I mean, what is your view, Mohan?
I think e-commerce will keep growing, okay. See what has shown in the last 2 years is people before that didn't know that Indians are going to shop online. It took about, we were in Yatra, right? It took about 7 years or 6 years before they could reach some scale. So what you're seeing that happening the last couple of years is people are going online and purchasing. Okay? And they'll continue to keep growing as mobile people start buying from mobile, okay, which is already happening. You're going to find it's going to accelerate further, and as alternate payment systems like credit card, debit card, all of them get more proliferation, you're going to keep growing. Okay? So I don't see it's going to be stopped, okay, until it hits 10%, maybe then it'll take a break, okay. But until the time it's too small now, I think it'll keep growing.
But give me an objective answer, like Flipkart, Snapdeal, what is the company which you admire? None of it is your portfolio company, but what is it which you admire as a business model, as a business being built?
I mean, between these two companies?
Yeah.
Look, I'm not an investor in both of them, okay. And what I would say is I've experienced purchasing in Flipkart. Their customer service was fantastic, okay. And they actually nailed I think the key problem in India where you go to any industry, the service is quite bad. Okay? You purchase anything, you never get it back. Okay? So I think they showed that there is a value in customer satisfaction, and they also showed that delivery and return policy can be made simple, so they build a trusted brand, right? So I liked a lot. Okay? Now between the two, everybody's evolving towards the same. They're a marketplace, inventory-led model. I don't think there's fundamentally any difference between Flipkart, Snapdeal, or even Amazon. Okay, they're all going to marketplace, getting more and more people on board. So finally, it'll be a question of capital available. Then who's going to be the number one in customer satisfaction? Okay.
What about the e-commerce industry? How is it going to pan out? Like, okay, fine, you have guys like SoftBank, DST, the world's best, and Tiger Global. Everybody seems to be quoting what is best out there. So there's one Flipkart, there's one Snapdeal. What about the likes of Pepperfry or Baby Oi or First Cry? What happens to them? Or Coos.com or Fashion in You? So basically there is number one, number two, and there's no distinct number three as such. So what happens to these guys then? So when you have a SoftBank or a DST putting their bucks on, Snapdeal or a Flipkart, it's a huge stamp of faith. So what happens to number three, number four, number five, if at all it is there?
I think the investment business has always been a business where winners get disproportionately higher attention and value, and probably that's the way it should be, because the winner has done something differently. The number one and number two have done something differently from the number three, number four that has made them number one and two, and that's what gives them the disproportionate value and attention and interest and so on. But there is space for a lot of different companies. They'll all have to specialize in a niche. So I think someone going head on yet another horizontal marketplace trying to fight Snapdeal or Amazon or Flipkart is unlikely to make it. But a niche company that excels in a certain space or a certain vertical, which these large horizontal players will find hard to excel in, I think still has values. And in the US, still has value. And in the US, we saw companies like Zappos and diapers being acquired by Amazon because Amazon wasn't able to excel or provide the sort of services and value that those niche companies could provide. So there's a lot of opportunity in those spaces still.
I think you got to break the industry into horizontal platform, which is what Snapdeal and Flipkart is. Okay, unless somebody gets overfunded beyond that, I think unlikely you'll see another player emerging in that horizontal play. Okay? But if you go vertical e-commerce, like travel, you have Make My Trip and Yatra, which are big. Okay, you will have furniture as a category. Globally, there are companies which have grown in furniture because it's got certain complexities which can't be addressed by the horizontal platform. Okay, same thing in fashion. There are guilds of the world which have grown big in US. So fashion will be a certain category. So I think furniture, fashion, and there will be a couple of more verticals, okay, where you need specialized expertise and which has got the scale, okay. They probably will not command a premium like the horizontal, okay. They are the equivalent of Amazon, okay. But will there be another 3 or 4 couple of billion? Yes, okay. Travel already, Make My Trip and Yatra are quite there. So I think the other 3 or 4 verticals will see billion-dollar companies emerge, okay.
So what happens to the others? There have been so much of investment in e-commerce, so those will basically die out, right?
That's the million-dollar question, right? Look, as far as the markets are healthy and there is availability of money, clearly these companies can continue to execute. I just hope that they get to a model that is self-sustainable earlier rather than later. And the reason for that, again, is this supply of money. How long is this going to last? And will a geopolitical issue cause the markets to freeze? Will the U.S. markets, as they either slow down or are not as attractive anymore for a period of time, will that slow down the flow of capital? These are questions that we just don't know. We'll have to find out. But clearly these business models today depend on the availability of large amounts of money, the stakes that are being raised every day by newer investors coming in. They just, it's a situation where you just have to have that capital, and if for whatever reason, outside of how the businesses are doing, this flow of capital stops, then we have a huge problem.
So you guys suggesting that this growth is for real. It might look unreal because India has not necessarily seen such valuation numbers before, but 5 years, 6 years down the line, this would only look cheap. Is that what we sort of are unanimously agreeing to?
I would say for the market leader, yes. In each one of this category, the market leader will get a premium pricing, which is $1 billion plus. horizontals will be much higher. Okay.
Do you agree to this view?
Yeah, so the question is, what do we mean by a bubble here, right? Obviously, it's not based on just PowerPoint presentations that these companies are raising funding. Clearly, there's underlying transactions, there's revenue being generated, and so on. So what I would contend is that the nature of this bubble is a little different, because most people seem to be completely overlooking the risk while looking at the potential upside, which is what the venture business is in a sense. But at the same time, you have some real what I would call risk factors that somehow don't seem to be included in the equation when people talk about this space nowadays. For example, what is the exit environment, right? So all of this is banking on the fact that these companies will be able to exit with the business models that they have and that will develop over the next 2 to 3 years. And honestly, I don't have a good enough answer for it, in the sense that clearly the category leaders will be able to find that exit, but that exit really is going to be outside of India. Structurally, not all companies are set up to do IPOs outside of India. And even if they are, that assumes that the U.S. market is going to continue its run, which many in the U.S. itself are questioning how long that run is going to last. So, there's all these risk factors that, sure, for the category leaders, I'm pretty sure that we'll look back and say that these valuations were cheap. But for the rest of the 80 or 90% of the companies that are raising a lot of money, it's a big question mark as to what we are going to say about those companies 3 to 4 years down the road.
So much of interest, in the cab space, the online taxi space. So there's Ola, which is also part of the $1 billion club valuation, taxi for sure. Now, what is the kind of growth? And again, would you sort of say that these numbers justify this is for real?
See, that is not proven yet, okay? Mm-hmm. In my view, that market, Uber, I think it's all triggered by Uber, okay? And if you look at Uber's hypothesis, it's not going to be a cab company now. It's going to be in future be a logistics company, transporting anything you want to order, like food at home, or you want to send a package from one city to another. Like everybody in the country, you and me, not just regular drivers, will participate in this logistic transportation, okay? So Uber positioned themselves as a mobile app company. If you look at it, it's really a mobile app plus location, connecting people who want something to be delivered to people who have something, who have spare capacity, whether the car or to transport that, okay? You just go and bid on it, okay? So it's essentially a platform which connects that, okay? So that's hypothesis is not yet proven, okay? So it's premature to say whether the valuation is high or low. I think only time will tell, okay? If they can just transform, if it turns out to be a pure taxi company, the answer to these companies don't justify the valuation, they'll crash, okay? If they transform in the next couple of years to be really a technology platform which can enable location-based logistic movement, yes, they may be valued, okay? So I think the jury is not out on it.
Okay. Klaas, what is your view here?
No, I think, look, you need to look at each vertical, and again, there can be transformation, as Mohan pointed out, down the line, business model innovation, and that can be, in certain cases, already priced into valuations. So I think what we just really need to look at is adoption is happening. In certain cases, there can be significant disruption because, it creates a new type of service which wasn't there.
Okay, I think if you were to pick one segment within this entire e-commerce phenomena which sort of looks kind of unreal or heated to you, what would that be?
A lot of these categories are just starting out, and so I don't think by any stretch of imagination or by any measure you can claim that a lot of these categories have been proven in the market yet.
Okay.
On a sustainable basis. So it's early days, and again, that's the nature of venture investing, is to take those sort of risks. But I would contend that the broader e-commerce category has been fairly well established, and the levers there on how the business model can evolve are fairly well understood. But a lot of the emerging categories,
which are such as
some of the verticals, for example, like the online grocery category, or to some extent even the online the taxi aggregation category. These are still early, right, and the early days. So they still need some more time to get to the point where they really understand the levers that they have at their disposal to tweak the business model. So I would contend that most of the categories where there's a fair bit of money going in are still early. And there's basically a land grab going on in these categories.
For me, it is what we just spoke about, the car space. The taxi market, yeah.
Taxi market.
And the second one is there are a lot of companies being formed in the home rental space, like Airbnb equivalent.
Okay. Now, I think my sort of, penultimate question as we're sort of reaching towards the end of the call, I think, is there any sort of iota of doubt still left that, often people talk about it, Flipkart, Snapdeal. Look, we are a young country. We haven't really seen people becoming so successful or becoming so successful so fast. I mean, it might look unreal in the face of it. Do you think that now these companies have become so big, can they really fall from here, or is it like too big to fail? I mean, what is your view?
I think the probability of that happening is very low. They've built some real businesses at a high GMV. $1 billion GMV is not something you can laugh at. I don't think these companies can shut down.
I think there is a risk for them if you find the future groups, Reliance, the Tatas, who are very large in the physical retailer space. They actually get their acts together and ultimately have an online play, because they have physical and logistics. If they put up a fight, I think these guys are under risk. So far, I've not seen that way. One more thing, I think the last one is Indian regulatory context. I think it's not clear, and not only at the national level, at the state level, right, and the movement of goods. If those gets complicated, I think that can be a drawback.
Okay, so taking that as a last thought, that the growth that we are witnessing now is for real, and the valuations are looking expensive now might look quite cheap the next 5 to years down the line, at least for market leaders. That is what was the unanimous view of our experts. We'll see you next time, next show. Till then, gentlemen, thank you so much for joining us and taking out your time. Thank you, really.
Thank you.
Thank you.
Thank you.
Bye.
Bye-bye.
Bye-bye.